Hi everyone. So in today's video, what I want to talk about is why stocks and shares ISAs are more important now than they've ever been. Before I go into that though, I just want to caveat this with a little disclaimer. I'm not attempting to give financial advice here. Financial advice is the different qualification to accounting, and I'd recommend you talk to a financial advisor about your specific situations. But what I want to do is just shed some light from an accountant's point of view and talk about the tax components of stocks and shares ISAs. Before I go into that, what is a stocks and shares ISA? A stocks and shares ISA is like a trading account, and you could put money into this. Sadly, the money you put into it is post-tax. So if you're a director and owner of a company, you would have paid potentially tax on your salary, maybe not, and then tax on your dividends to get it out, and then also corporation tax on those profits. However, what you can do is you can take that income after tax and put it into the stocks and shares ISA. You're limited to 20 grand a year, and then you can invest that money. I'd always say in index funds, but once again, talk to a financial advisor because that's what they advise on. But you can invest that money in whatever your advisor or you decides. And over time, hopefully, if you made the right decisions, that will grow. The value of those investments will grow. They might pay out dividends. You might reinvest those dividends. And the great thing about stocks and shares ISA is all of that growth is tax-free. What that means is down the line, let's say you've been paying 20 grand into your stocks and shares ISA for 10 years, that balance and the value of all those holdings might be worth like 400K. And it might be paying you out 30, 40,000 a year in dividends and just on a purely tax-free basis. That's stocks and shares ISAs. Why you don't get the tax relief when you put the money in, you do get the tax relief when you take the money out. And that is a really good thing because it's hard to get tax-free income these days in this country at least. So that's one of the great things about it. A pension, in contrast, you get the tax relief when you put the money in, but you don't get tax relief on its growth because when you then take the money out later on, you get taxed on the amount you take out. There are a few caveats here. Firstly, if you're taking money out at the higher rate to put into a stocks and shares ISA, that's probably not a great deal because you don't want to be paying high rate tax up front to then get that tax-free growth. You're probably better off putting money in your pension at that point. But if you've got any of your basic rate band left, or as a family, you've got any of your basic rate band left, trying to get more money out of your business at that basic rate rather than just leave it in there and then putting it into your stocks and shares ISA is a really good idea because paying basic rate tax and then getting the tax-free growth isn't too bad. So that's the one point I'd make out. But this video is maybe topical, and the reason it's topical is because the budget in October 24 actually brought your pensions into your estate for inheritance tax. And what that means is if you die and you've got a load of your pension left, if your total estate, and there's two of you, including your home, goes over £1 million, you're going to get taxed 40% of that, and that can include the pension. It wasn't always part of your estate for inheritance tax, but it is now. So the idea is if you got a stocks and shares ISA, actually you can just gift all the money in that tax-free, ideally 7 years before you die, to your kids and the rest of your family. And then there's no inheritance tax consequences to that. And then you can just live off your pension for the remainder of your life. So from a planning tool, stocks and shares ISAs are becoming far more valuable to avoid the inheritance tax, although this Labour government might not last more than 3 years, and the next government may reverse a lot of this, or in the future, the pensions, you might lose the 25% tax-free lump sum, in which case stocks and shares ISAs will become even more attractive. One of the benefits of the stocks and shares ISA is you can, if you need to retire early, you can actually also just get access to that early. Obviously not with the lifetime ISA, which can also buy stocks and shares, but if you with stocks and shares ISA, you can access that money whenever you need. The downside compared to a pension is it's part of your assets if you're ever made bankrupt, but hopefully you won't be. The reason I wanted to do this video is because I've been talking to a lot of clients and they always talk about pensions, but very few people talk about ISAs. So now is a good time to start talking about stocks and shares ISAs. I'll see you in the next video.